So we continue our discussion with this drawings. Actually, this is the thing which we were discussing in previous session as well. I explained you that drawings, these are the goods, or it could be cash, either cash or maybe goods, which the owner of the business, the sole proprietor, takes from the business for personal use. This is not expense for the business. This will not be shown as expense in the income statement. In fact, drawings are subtracted from the capital. We consider it as like, opposite of capital. Like when you put money into the business, it is called capital you have added. When you take drawings out of the business, your capital decreases. So we'll discuss actually drawings here and few more concepts. So drawings are the amounts of money, and actually it could be goods as well, taken out of a business by its owner. Okay, so remember, so now this is what one concept you need to understand. We will be using it while we make the balance sheet. Actually, this is the concept. We will use it while making balance sheet. So there is something which we called opening capital. Opening capital means the capital at the beginning of the period, at the beginning of the year, or the money which you have invested in the business in the beginning. And then you call closing capital. Closing capital is like, end of the year, the amount of capital, amount of money which belongs to the owners at the end of the year. So how do you calculate from opening capital to closing capital? So let's suppose in our previous example, which we were doing, we said that capital was 1,000. And then sometimes it is possible that there is further capital introduced, because when you start business, maybe you started with 1,000. Later on, you realize that 1,000 capital is not enough and you need some more money into the business. So you should add it. It says add. So let's suppose we invested 500 more. So it means that opening capital plus additional capital, it is also called capital injections. Okay, so it is added into the opening capital plus profit. If you make any profit, remember we made profit of 100, so we add this also. So it means that the owner of the business invested 1,000, then he further invested 500, and then the business made a profit of 100. So you add 1,000 plus 500 plus 100. These three numbers will be added minus any losses if the business make. So in our example, we assume that business made a profit. Let's suppose that business does not or did not make any profit. In fact, the business made a loss of $50. So then we should subtract it. Losses are subtracted and drawings are also subtracted. So these two numbers are subtracted. So when you make a total, you call it closing capital. So it would be 1,000 plus 500, 1,500. It means that business had 1,500 in capital. Then the business made a loss of 100. So your capital will be decreased to 1,400. And then you took $50 home. You said, I need $50 back. And your closing capital is 1,350. This is the number 1,350. So how do we remember the formula? Opening capital plus additional capital plus profits minus losses minus drawings. So this is called closing capital. And closing capital also sometimes in your book, they would refer it as net assets. Okay. It is also commonly used. We use the word net assets. Net assets. So remember only this net assets as a terminology here. We will discuss it further as we move on. So net assets, okay, it is written here, net asset is equal to initial capital plus capital introduced plus profit minus losses minus drawings. So this is the same thing. We just put it again as an equation to calculate. So we will do some short, questions. On 1st January 2013, a business had net assets of 15,000, which means opening capital or whatever, 15,000 on 1st January. On 31st January, net assets amounted to 19,000. So it means that your opening capital, let's call it opening capital, was 15,000, and let's call it closing capital was 19,000. So you have been given opening and closing, and in between, so you can see that the capital has increased by 4,000. Okay. So what comes to your mind, that capital has increased by 4,000. So why it has increased by 4,000? Remember how it came to closing capital? If I go back to the equation, so let's think like this. This is 15,000. This is 19,000. So it means that maybe they have made some capital injections. Maybe the business has made some profit. They might have taken some drawings or some losses. But the net result is that it has increased by 4,000. Okay. So the reason could be why it has increased. The reason could be either capital injection or additional profits, or maybe losses, or maybe there are some drawings. So we will see what the question asks us to calculate. No capital had been introduced in January, but the owner had made drawings of 750. Now, see here, capital has not been, you have not added any capital. Instead, you have taken out money. Instead, you have taken out capital, you have taken out, drawings, and drawings, they decrease capital. Drawings should decrease capital, but the capital is increasing. So it means that the business is making profit. Okay. So it asks you the question, what profits were made in January? Now, see, logically speaking, I had my opening capital 15,000. And if I subtract 750 drawing, my closing capital should be 14,250. Capital injections are not there, losses are not there, and it says that closing is 19,000. So actually the difference of these two is your profit. The difference of these two is going to be a profit. I mean, 15,000 was opening. I took out money. It became 14,250. If there is no profit, my closing capital should be 14,250. But there are some profits which are adding up on this opening capital so that it becomes 19,000. So anyways, this is a mathematical way of thinking. You can see it how to do that. You can just put the numbers in the equation. This is the solution which has been given here. Increase in net assets 4,000, whatever, 4,000, like 15,000 and 9,000. Remember 15 and 19, 4,000 is the increase in net assets, capital introduced, profit, and drawings. You see, increase in net asset is 19,000 minus 15,000, which is 4,000. And then it says that if it is 4,000, your capital introduced is nil, profit we assume is P, and drawings are 750. So when you take this thing from equality from this side to that side, it will be added. This is minus 750, it will be added. If this figure is bothering you, I can just write down like here. Let me type it. It would be better for me if I type. It says that we know that closing capital is equal to opening capital plus profit, right? Minus drawing. We are only taking these two numbers because capital injections are not there, losses are not there. If you want, you can say opening capital plus additional capital, for example, okay? But because additional capital is 0, so I did not write it. So I just leave it, it is 0. And then I say, okay, closing capital, I do not know. Closing capital, I know it is 19,000. Opening capital was 15,000. Profit, we do not know. Minus drawings, we know 750. Okay. And then we say, if we have to calculate P, we would say 19,000 minus 15,000 is equal to P minus 750. Or you can say 4,000 is equal to P minus 750. Or you can say that P is equal to 4750. So this is that simple, that equation which I explained you before, not really very difficult, but I just solved it for those people who want more explanation. Okay, another question. On 1st January 2013, a business had net assets of 15,000. On 31st January, net assets amounted to 19,000. So far, it is the same situation. Additional capital of 1,000 has been introduced in January, but the owner had made drawings of 400. Owner had made drawings of 400. So additional capital is there. Drawings, they have changed from 700 to 400. What profit they made in January? Now, before I go into equation, in equation, you can do it in 2 minutes, okay? Putting the numbers in equation is not difficult, but I want you to understand it mathematically or logically. For example, from 15 to 19,000. Why I'm explaining it like this? Because it will help you in doing questions and exam, okay? So I know that the additional addition in capital is 4,000. If there is no other information given, let's suppose this is not here, let's suppose this is not here. I only know that in the beginning of year, I had 15,000 and end of the year, I have 19,000. I can say that this is the 4,000, which is addition. So maybe this is my profit. That's all. It is very simple if this information is not given. But then we know that there is some additional information given. So we know that the increase in net asset is 4,000, but there is additional capital. And there are drawings. So it means that out of this increase of 4,000, 1,000 I put additional money from my pocket. So it is not profit. I took money from home. Okay. It is just like maybe let's suppose that I give you 15,000 to start a business. And then end of the month, you come back and you say, see, I've got 19,000. I made 4,000 profit. And then I will tell you, no, you did not make 4,000 profit because during the month you came to me one time and you said, give me 1,000 more. So I gave you 1,000 more. So if I subtract it, it means that your profit is only 3,000 because that is additional capital injection. Okay. So you subtract it. It becomes 3,000. Now comes this 400. What to do with this? And then I say that, okay, I also took 400. If I had not taken 400 from the business, my business would have more money. It would not have 19,000. It would have 19,400. So I should add this 400, which means that even after taking 400, I still had 19,000. So your profit should be 3,400. Let me explain you again. You had opening 15,000. You already have taken a drawing of 400, which means that during the month you already took money. If you had not taken this money from the business should have 19,400, right? Now you see that how much is the difference? From 15 to 19,400, it made 4,400 addition. This is the profit. But then I say, okay, 1,000 is my additional capital. I subtract it. Answer is 3,400. Very simple. So I'm explaining you like, you need to think like a situation, a scenario, so that when you go to exam, you don't, even if you do not remember the formulas, you still should be able to do this question. Now let's do it quickly with the help of the formula. Answer is 3,400. We already know. Okay, how to put the formula? Okay, this is again, like, you remember that. Let me just put the formula my way. I wouldn't say increase in net asset. Actually, increase in net asset means closing minus opening. Closing minus opening. But I will use that traditional formula, which we said before. We said that closing capital is equal to opening capital plus additional capital plus profits minus drawings. Okay. This is the formula. And by the way, increase in net asset means the difference between opening and closing. So 19 minus 15, you get 4,000. So I can say that closing capital is 19,000, opening capital is 15,000, additional capital is 1,000, profit I do not know, I put it as P, drawings are 400. Okay. And then I say 19,000 minus 15,000 is equal to, and actually I should, okay, I'll go step by step, okay, so that you don't get confused. I'll take more steps, but I will explain you step by step. So it makes me 4,000 is equal to 1,000 plus P minus 400. Of course, in exam, you will not do so many steps. I'm just doing it to explain you. And then 1,000 goes that side. So it becomes 3,000 is equal to P minus 400. And then you can say that P is equal to 3,400. This is another way of doing it. Okay. So either you do with the logic, which I explained to you mathematically in your mind, or you do this with this formula, with this scenario, which I have done, or you can don't, or if you don't want to write 19 and 15, you start with increase in net asset and you start with 4,000. Anyways, answer should be easy. Okay. Another question comes on 1st January 2013, a business had net assets of $25,000. Then on 31st January, end of the month, the net assets amounted to 23,000. So net assets are decreasing. It looks like the business is making a loss. but not necessarily. But maybe let's see what happens. Maybe he took out money. A loss of 7,000. Oh, a loss of 7,000 had been made and the owner withdrew 1,000 to live on. So what additional capital was introduced to the business in January? Okay. Now, this time they're not asking for profit. They were asking you additional capital. Now think like, beginning you had 25, right? You had 25,000. Then you made a loss of 7,000. You didn't make any profit. So if you made a loss, that should be subtracted. And then you came and you also took drawings. Remember how much drawings? 1,000. So drawings they decrease the capital. So I started with 25,000. I took 7,000. I made a loss of 7,000 and I took 1,000 as my drawings. So it means that 25 minus 8, it should be something like 17,000. My closing capital should be 17,000 in my hand. I should have only 17,000 left. But the question says that you've got 23,000 left. I mean, from 25,000, if I take out the loss and if I took the money from my drawings, the money in my hand should have been 17,000 only. But it says that you've got 23,000. So why this money is more? Because there is additional capital. You might have invested money into the business. So the difference between 23,000 and 17,000, which makes it, I think, 6,000, that is the capital injection. That is the additional capital which you made into the business. Okay. So we see it like this, 7,000 here. 23 minus 17, 6,000. We talked 6,000. You see like this. You put the numbers again, the same solution. I'll ignore this one and I'll go with my equation the way I've been, doing with you. So that is a little bit longer, but just trying to not to make you people confused. Opening capital plus additional capital plus profits minus losses. So here you've got losses in this business or profit in this business, losses. So minus losses and minus drawings. Okay. So closing capital was, I think, 23,000. Opening capital was 25,000. Additional capital, we do not know. We call it X. Minus losses were, I think, 7,000. And then drawings were 1,000. Okay. So then you can say that 23,000 minus 25,000 is equal to X minus 7,000 minus 1,000. Minus 7 minus 1 means I can call it minus 8,000. Okay. Then 25,000 and 23,000, it will give me minus 2,000 is equal to X minus 8,000. And then I call it minus 2,000 plus 8,000 is equal to X. And therefore, X is equal to 6,000. This is like, I'm just leaving it to you, whichever way you feel convenient. One is the way which I was explaining you before, mathematically, logically in your mind. The second is you do it in the longer way. The third is you do it in a shorter way. Like in this case, increase in net asset is with minus because your opening capital was 25 and closing is 23. So this net asset increases closing capital minus opening capital. So closing capital is 23,000 minus opening capital is 25. So it gives you minus 2,000 is equal to capital introduced C. Instead of profit, there is a loss 7,000 and this is 1,000. You just put the numbers and you get your answer. It looks, I hope that you don't find it very difficult, but the thing is that you will definitely going to get some questions in exam from this type of scenario. At least one question minimum will be there, might be two. Okay. Then we talk about income, expenses, and profits. Thus we keep it for the next session.